Good morning. This is Chris Robinson, Robinson Ag Marketing, with today's pre-opening grain comment for August 7th, Thursday. Well, now we get to have the big decision: is the low end in D's corn after an 83-cent break, which took from February, March, April, May, June, July, August, 6 months to gradually give up 83 cents. We've had a bounce. Yippee! From 396 and three quarters to last night's high at 404 and three quarters. You do the math, that is a whopping 8 cents. So on an 8-cent bounce after an 83-cent sell off, who out there is going to call the bottom and say, that's it, get long, giddy up? It's not me. That being said, it's nice to see a little bit of a recovery. We just got hammered in the past 13 days. 13 days ago, we were at 428, above 428, on a little bit of a recovery there. 430 and a quarter was the high on July 18th. So, again, I don't get into the game of calling the lows and calling the highs. What I want to do for my clients is to defend the revenue until we are able to sell when we want to sell corn, not when we feel like we have to sell corn. So today is August 7th. The report's on August 12th. If you can tell me that we're done, and you can promise me that you're done, and you can promise me that you'll write me a check for all the money that we could possibly lose if we don't have, puts on here, then, go for it. Let's go. Call me. Give me a direct call. Give me a direct line. I'd love to hear it. In the meantime, since I don't have a crystal ball, I would say keep your puts on until you sell your corn. We'll roll the puts down when we can. The next risk is August 12th. I don't know what that report's going to say, but I don't want to be in a situation where we've rallied 8 cents. Everybody says that's it. I'm calling the low. I don't need any more downside protection. And then on August 13th, we're sharply lower, and you're like, oh, well, maybe I should have kept my puts on. So the puts are there to protect you from over speculating. You're already speculating, you're already long all the corn in the field. These puts are not there to be a trading vehicle. They're there to be a defensive mechanism, so you don't feel like you have to sell if corn goes below. The low is 396 and three quarters. What happens if at harvest we're at 366 and three quarters or something crazy like that? I can't predict that, right? So keep your puts on until you sell your corn. That's all I can tell you. D's corn up 3.5 cents, 404 and three quarters. Again, 8 cents off the bottom. Novi beans 988. The low last night was 983. Same idea. We've just got completely hammered here in the past month or two. You go back to June 20th, we were at 1074. All right, yesterday's low. Let's see what exactly 981 and a quarter. So again, a 7-cent bounce after a big sell-off like that. After we've come down and tested our lows since April 9th. So a 4-month low. Now somebody's going to step in and tell me, oh, don't worry, we're going to rally back and everything's going to be okay. Risk management is about accepting what we don't know. So again, roll down your bean puts if you can. Keep your bean puts on. We still have to get to that USDA report on the 12th. A nice short cover and rally in the wheat overnight. D's wheat Chicago up 8.25 cents. September wheat Chicago up 8.5 cents, trading 517. So yeah, it's nice to get a bounce. Is it a dead cat bounce? We won't know until August 12th. So you have 5 days to wait and see. But overnight markets, it's nice to see the rally. Nice to see a recovery after certainly we've gotten beaten up here for the whole year in the grains. No two ways about it. I mean, 83 cents off the high in February in new crop corn. Just a gut punch to everybody. We grow 15 billion bushels of corn every year. You do the math. What's 83 cents on 15 billion bushels of corn? And now analysts are out there, or analysts, experts, whatever you want to call them. Are we going to have a 181 average yield, or is it going to be 188? What's the next yield guess? Even at 182, it comes out to about 16 billion bushels. So what's 80 cents on 16 billion bushels if it was not hedged? That's what I'm trying to deal with here, rather than calling the highs and calling the lows. On the flip side, the same people that want to call the low here in the grain, they've been trying to call the highs in our cattle for 5 years. Cattle just keeps being explosively higher. Sooner or later, cattle is going to correct. I don't know if it's going to be this week, this month, or this decade. But when it comes, you're going to want to put. So that's it. If you're looking for specific levels, I put those out in the letter every day. Um, basically, there's a whole list of things I go through and provide support and resistance levels. I just wanted to comment on the overnight action. And again, I really kind of wanted to hit home that if you're a producer, um, be careful calling tops and calling bottoms. Your risk is what's in the field. Your risk is what's in the pen. Defend that risk. And the whole idea with the put option is when we use it, we don't want it to pay off. It's like buying life insurance before you go on a balloon ride. It's like buying life insurance before you go, hang gliding. You don't want it to pay off. You want to enjoy the experience. You want corn to rally higher. You want to be able to sell corn when you want to sell corn, not when your banker or your spouse forces you to sell corn. And that's the role of these put options, in my opinion. This is Chris Robinson. Have a great day. If you want some help, give me a call, 312-638-8868. We'll see what happens this afternoon, and we'll be back with an afternoon update. Have a great day.